All right, everybody. Dan here, stockmarketmentor.com. And we're going to look at the Roaring Kitty carnage today. So the dude who absolutely crushed Melvin Capital a couple of years ago, was it? And was the was the impetus for a movie called Dumb Money. Turns out to be back again, and the guy's not so dumb. He wasn't then either. Anyway, it's really fun to see short squeezes on stocks that are really, really, really heavily shorted by hedge funds, because the guys in hedge funds, most of them do not outperform the market. They just talk about it, but they don't. And they tend to think that they're smarter than the market, and a lot of times they are. But every once in a while, but they're not really smarter than the market. You see a stock going down, you think you're the only one that sees it, but when they're not, they're wrong spectacularly. And I think the challenge that these guys that run money have is they create these algorithms, these formulas, whether they're typically based on fundamentals as well as technicals, and their fatal error is that they think that the market actually trades according to those things. They'll look at a stock and say, oh well, it's X number of percentage points or multiples of X above fair value. And what's fair value? Fair values, according to their calculations, some stupid ass number that doesn't mean anything to the market. People trade the way they trade, and it's all a function of how much there's for every stock bought, there's a stock that's sold. It's an even exchange from one trader to the next. And so this idea of, so why does the stock go up? Oh, there are more buyers than sellers. No, there aren't. They're the same. The question is, how aggressive are the buyers versus aggressive of the sellers? That's what really, really matters. And that's a psychological thing for the most part. In fact, it's for 100% of the time, it's a psychological thing. Even if an institution is building a position that they build over weeks or months, even then it's a psychology game, because the desk traders will look at the price action. And if the price action gets too hot, too much aggressive buying, they'll pull back and let the aggressiveness kind of wear itself out, and then come in and buy more. So in this case, though, with GameStop and then AMC as well, but I thought GameStop would be better to illustrate my point here. In this case, you have to be really, really careful. And this is why. First, I would look at the entry on this as not right at the open. You've got to kind of see what's going on first. Your entry would be right here on the opening range breakout. Now, this is a 5-minute chart here. So the opening range breakout would be when the stock, and you can use a 15-minute ORB if you want. I tend to use the 5 on something like this, where the stock runs during the first 5 minutes, does whatever it's going to do. And then when it breaks above the intra-period high, that first 5-minute high, that's the time when you want to be buying the stock. Similarly, if it's a short, let's say the stock gaps way up and then it starts trading below the low of the first 5 minutes, then that's a short. And then the idea would be, if the stock reverses again, and they do whipsaw, if it reverses again, then you just go ahead and close that trade. So this gives you at least a leg up and puts you in the right direction, in the direction of the trend. But this is the deal. So it's real easy to say, 36% in 15 minutes, or even more in 25 minutes, over 40%. What I got to tell you, because people got screwed last time with Vladimir, whatever the hell the guy's name is, the guy who originated Robinhood, where they kept getting pressure from Citadel, who was basically capitalizing Melvin Capital, and they were just getting absolutely crushed. Well, good old Ken Griffin's company front runs, they call it, quote, providing liquidity, but they front run all the orders on Robinhood. So Robinhood is basically in the pocket of Ken Griffin. Everybody knows that. And so what happened last time was, at some point, like they'd never seen this before. I'd never seen it before. Like some dude on a subreddit platform, whatever you want to call it. I'm not a Redditor. Where a guy just goes ahead and says, hey, I really, really like this stock. And suddenly everybody starts rushing in, and they're holding for several days, many days, until finally Ken Griffin calls up good old Vlad and says, dude, you got to shut this down. We got it. We got to be able to get out of this stock. We're trapped. And so magically the system went down. And then when it came back on, hey, Citadel was able to liquidate all their short positions. So that's a simplistic version of it, but it's kind of more accurate than not. You can fact check me on this. Here's what happens though. I'll cut to the last part. You need to be focusing on selling into strength. You don't want to get caught in a situation where you're chasing something like this down. You have to say, I'm in early, and if I get 10 or 15% out of it, I got to sell some of it. And then if I get another 10% or 5%, I got to sell some more. I got to sell to those people that are rushing to buy the stock. And this is why. Let's go to the 1 minute chart. Okay, this thing, the flat lines here when it doesn't trade. So what do we got? 6 minute in, nothing but flat line for 5 minutes. Again, nothing but flat line, nothing but flat line, nothing but flat line. Then suddenly, magically, flat lines here, boom. Guys, this is a 1 minute chart. Do you think you would have gotten a fill if you decided to sell here? No, you wouldn't. And then it breaks, it goes sideways again. Boom, 1 minute later, it trades down to here. Again, do you think you would have gotten a fill? No, you wouldn't have. And from the top to the bottom here, you've lost 15%. The point is this. In these kinds of markets, these fast markets, you can place an order, a market order to sell, and there is no assurance that you're going to get filled. And the broker will say, well, hey, you know, it was a fast market and your order didn't get filled before they halted the stock again. And then you're just in line like everybody else. So the point is, if you're going to trade this stuff, and it's fun to trade it, if you're going to trade this stuff, don't get so greedy. And definitely, at least in my view, it's really, really risky to be holding it overnight. That's not to say that it won't be a profitable trade, because it very well could be, and it probably will be. But what I'm saying here in this video here is, make sure you're selling some into strength. Make sure you're selling some to the FOMO folks that are in after you. And then you don't get caught in these downdrafts that you can't get out of until the stock finally, till you basically give up all your profits. So that's my suggestion on this. This could, I hope, God, this is going to be fun to watch. This thing could run up. This thing could run up to $40 easy. It almost did today. It could definitely do that. But I'll just say again about tomorrow, if you're going to be trading this stock tomorrow, I would suggest just heeding my suggestion here. Just make sure you're not looking at this as the one trade that's going to be able to make up for all your silly trades. Look at it as one trade that will definitely give you outsized gains if you trade it right. Okay, that's all I got for you today. Members, we did a long training session today, talked about a lot of different things. Only thing that I can suggest is you should definitely play it in fast speed. The mind thinks a lot faster than the mouth can talk, particularly since it's my mouth. Okay, all right, see you guys later. Have a good one.